This podcast is sponsored by Dalupa. Dalupa was founded by a former hedge fund analyst. He didn't have a tool that he trusted to be 99.9% accurate that allowed him to pull the updates directly into his existing models and that had the granularity and KPIs, guidance, and non-GAAP adjustments that he needed. So he built Dalupa. Dalupa is the fastest growing source for public company data, with data available for over 3,000 companies. Hundreds of AI algorithms collect and organize customized company historicals with an accuracy level and depth of data that is higher than anything achievable by other modeling tools. Each data point is audible to the source. Dalupa's Excel plugin is the first to allow you to update your models in your existing format. It's simple and non-invasive. Dalupa's clients are able to cover more opportunities and generate more ideas. No more data errors, no more Excel monkeying, just the fundamentals. See why equity investors are switching to Dalupa. Visit dalupa.com/YAVP. That's Dalupa, DALOOPA.com/YAVP to learn more. All right. Hello and welcome to the Yet Another Value podcast. I'm your host, Andrew Walker. If you like this podcast, it would mean a lot if you could rate, subscribe, review it wherever you're listening to it. With me today, I'm happy to have for the second time, my friend, Artem Fokin. Artem is the founder and portfolio manager at Caro-Kann Capital. Artem, how's it going?
Hi, Andrew. Nice to be back.
Great having you back. Look, let me start this podcast the way I start every podcast, just with a quick disclaimer. Nothing on this podcast is investing advice. People should consult their own financial advisor, do their own work. Today, we're going to be talking about a company that is listed in London. It's the largest marketplace in Kazakhstan. It's a reasonable market cap, but it's a pretty small cap company. If the combination of foreign listing, Kazakhstan company, small cap market cap size doesn't just scream buyer beware and do your own work, I honestly don't know what will. So please remember, not investing advice, do your own work. That out the way, the company we're going to talk about today is Kaspi. The ticker there is KSPI. They trade in London. And Artem, I'll turn it over to you. What is the elevator pitch for Kaspi?
Okay, so before we get into elevator pitch for Kaspi, I want to reiterate what Andrew just said. Caro-Kann Capital LLC and or its affiliates have economic long position in Kaspi shares, and I'm biased. This is not investment advice. This is not recommendation to buy or sell any security, including Kaspi shares. So please do your own work. Please consult your own financial advisor. Please consult your own lawyer. That's number one. Number two, I want to thank you for having me over for the second time, because I am deriving tremendous non-financial benefit from being here, because of your recordings, I can memorialize the hairstyles that I have had over the last few years. Because the last recording that we did about a year and a half ago, I think, I was like in the middle towards the end of my COVID hair. So now I just want to make this appearance that I actually did get a haircut. So if anybody cared about the topic, now they know Artem made it to the barber shop. With that, I think we can wrap this call and just, go home.
No, look, I appreciate I sometimes I do the same thing. I look and I'm like, oh, I'll look at an old podcast. Oh, it looks like I was really letting it go. Or the first podcast were like August of 2020. So I was very much with you with the poofy hair. But no, appreciate you coming on for the second time. I absolutely hear you on that. You are the only guest I have done the podcast from not in my apartment, I believe, because I was so excited to have you on for the first time.
You're flying to Spain, I think, same day.
Yep. I was so excited to have you on the first time. I did it from my brother-in-law's house right before we flew to Spain. Anyway, neither here nor there. Elevator pitch for Kaspi.
Okay, so this is how I think about Kaspi. When I talk to some of my friends, this is how I explain it. I say, okay, imagine there is a country in the world. And imagine that country has about 18 million people population. And imagine there is a company in that country. And that company has three businesses. Business number one, it's payments. Think about it as PayPal or Venmo in the US, or think about it as WeChat Pay or Alipay in China. And that business is dominating the market. It's 65, 70, 75% market share in payments involving consumers, depending how you count and slice the pie. There is a second business, which is marketplace. This is 3P marketplace. So it's not 1P. The company does not own inventory. and think about it as Amazon Marketplace, not Amazon 1P commerce, but Amazon 3P commerce, or similarly think about it as Alibaba in China. Similarly, this is the dominant marketplace in the country. And then there is the third business, which is unsecured consumer lending. A lot of that is buy now, pay later, BNPL. So think about it as Affirm in the US or Klarna or Afterpay. And the company, obviously, it's more difficult to dominate entire vertical in consumer lending because there are so many different products. But within buy now, pay later, this is the dominant player. So imagine that you got an opportunity to invest in a company that is dominating the space, growing revenue at, call it 30% rate, and it's very, very dominant in the country. Normally, we would be talking about this type of business. We would be debating what the right revenue multiple is. And obviously, sometime in 2021, in the middle, it will be one number. Today, it will be another number, a lot lower, just a spoiler alert. And we would be debating what normalized margins are because we don't really know, et cetera, et cetera. In this case, we actually do know the numbers. And you can get this company, so its financial profile, growing roughly, call it 30% a year, local currency, maybe a little bit higher. And it has consolidated EBIT margins of roughly 55%, like 53, 54, 55, and has net income margin. So like this is normal IFRS net income margins of around 42, 43, 44%. And this company, so it means that this company can trade on normal earnings, not on revenue multiple and normalized earnings in 2035 or 2045 or 2055. So, but on normal earnings of this year. And this company today, based on the company guidance, which only fourth quarter remains outstanding, which will be reported in the next few weeks. So this guidance, I think, is very reasonable and achievable. It's trading probably around 12 and a half times earnings. So that's the pitch in a nutshell. And then typically people will ask me like, so what is the catch? What is the catch? I was like, well, the catch is that the country, I didn't tell you the country typically, you Andrew mentioned this to your listeners and viewers. I say the country is Kazakhstan. And that's why this company is priced today this way.
No, look, that's great. And I'm glad you said Alibaba, because like the first thing when we started talking about this, you look, they're very clear. They want to be a super app. And the first thing you talk about, especially in 2021, like the super app, Alibaba, like that's kind of the way to think in your head. Alibaba is obviously a little bit of a different model, but that's kind of the way to think about it. Like these guys are, and more than Alibaba, these guys are like the dominant player in Kazakhstan. You know, when COVID hits, like the government is distributing payments, the COVID stimulus, they're distributing it through Kaspi. Like these guys are the way that you do anything if you're in Kazakhstan.
Correct. So in my opinion, Alibaba is not the best comparison. I think WeChat is a lot better comparison, because WeChat not only they have the gaming business, and then they have their app which entire China uses. Also, they have WePay, which is a very dominant way to send money to each other, right? I remember several years ago, my wife was in China and she went to like local place, kind of manicure type place, and she left her wallet at home. And she asks the person who works there, says like, excuse me, unfortunately, I forgot my wallet. Would it be too much trouble for you to walk with me to my apartment? I live, not far away, and I will tip you very nicely for your trouble. I apologize. And the person looks at her and says, like, don't you have your phone? She's like, of course I do. Like, just send me money here, right? It was like probably 5-6 years ago.
Yep.
So, and she's just sent money via WePay. So done, right? So that's number one in terms of comparisons. Number two, I like your example of how prevalent and important Kaspi is for the life of local people of Kazakhstan, for the citizens of Kazakhstan. Another example now, and it's a relatively new product feature, you can renew your driving license through Kaspi app. That's one example. Another example, you can register yourself as sole entrepreneur, like in the Kaspi app. And I believe that you also can establish a company via Kaspi app. So that shows you what you can do. And to show involvement on the payments business only, on average, a consumer of Kaspi is doing 58 transactions a month using the Kaspi payments app.
Yep.
Which you think about, it's like almost twice a day. And people use it to send money. Like Andrew and I go in New York. I'm in New York, let's say. We go for dinner. Andrew generously picks up the check. I like Andrew, no, I will send you my half. So I send him my half. It will be via Kaspi if we're in Kazakhstan.
Yep.
And similarly, people use Kaspi app to buy groceries. They buy something else. So it's tremendous. The app and the company plays tremendous positive role in the life of everyday consumer.
There was an old art when I was researching this, there was an old article that described it. And they said, I mean, it's along the lines, you can renew your driver's license on there now. They described it as Kaspi is the unofficial national bank and national app for Kazakhstan. Like that's how prevalent this thing is. So we are talking about literally the dominant app in Kazakhstan. I just want to dive a little bit further than that. So actually, let's start here. We've talked about, hey, this is trading 12 and a half. This is trading 12 and a half times 2022 earnings. Again, like 2022, they've already reported three quarters of earnings. They raised guidance twice throughout the year. So it's not unheard of for someone to miss a Q4 guidance. It'd be kind of surprising, but 12 or 12 and a half is probably the right thing. I just want to start by framing this. This is a $15 billion USD market cap company with about $2 billion in revenue. Can you frame that? Because all the revenues from Kazakhstan. Can you just frame that versus kind of the overall Kazakhstan economy?
So the way I think about it is a little bit differently. So I'm doing it more bottoms up. So first, let's start with payments. And in payments, there are two different types of payments. One is something that will not be generating commission revenue for Kaspi. For example, you and I go for dinner, you pick up the check, I want to send you my half. It's similar to PayPal. If I send you money via PayPal, because it's not commercial transaction, you just picked up the tab, it will be zero commission, right? So then there is a second block where it's called RTPV. So, like revenue generating total processing volume. That one generates a take rate for Kaspi, and Kaspi makes money on every transaction of that nature. Right now, roughly, and this is rough numbers, and remember, I'm rounding foreign currency, which fluctuates daily, etc. But the way you think about it, on average, every consumer of Kaspi today, and we're talking about roughly 12 million consumers.
Yep.
Out of, and just to make sure, the country as a whole has about 18 million citizens.
Yep.
So 12 million, and obviously some of those citizens are very little, right? Yeah. Children, or maybe very elderly who may not be very friendly with tech, like it's all those things. So keep this in mind, right? So, but sorry, I misspoke. It's roughly around 10.7 million of active consumers right now on payments. So I misspoke that. So it's 18 million. So this is the penetration. You can judge you can form your own view about how many kids are there, which will not be consumers for a while, etc. So now, if you look at the revenue generating processing volume per person, per active customer, is about $2,500 per year. If you look at the salaries of average Kazakhstan citizen, we're talking about, and which results roughly in their annual spend, we're talking about roughly 9,500. So in theory, all of that spend can move over time to Kaspi. In theory. I'm not projecting that it will happen eventually, because there will be always some either other payment system or some level of cash usage, which, by the way, something to appreciate. In the US, you can live in New York or San Francisco or many other places, and you can carry your wallet with $20 in cash just in case, and you can have the same $20 bill for a year. In many countries and emerging markets, it's not that way. Credit card usage or debit card usage may be not as prevalent. As a result, you need to have cash. Otherwise, you will not get far away. A driver will need you to pay him in a taxi, a cash, or local grocery store, or local cafeteria. So Kaspi and Kazakhstan used to be a country with very high usage of cash for a long time, which is very reasonable. And when Kaspi Payments app took off, that amount of cash used went down massively.
Yep.
If you go to NBK is National Bank of Kazakhstan website for data for the entire country, for the entire industry, for all payments, you will see how fast local payments were growing. We're talking about like 200, 300% growth for the last several years. And why is that? Is it like because all of a sudden people started getting more money? No, because cash was getting substituted and Kaspi Pay was taken. So going back to sum up, roughly now, right now, 2.5 thousand per year. It can go to as high as 9.6 thousand. Probably will never get there, but over time, this is how I think about the trend, getting into that direction. Now, if you say, oh, I am bullish on the economy of Kazakhstan, and that $9.6 thousand per year would be rising, then the upper ceiling will be moving up. If you're bearish on Kazakhstan economy, then you may say, I think it will be dropping. So you make your own call here. So that's one element, how I think about payments. So then there is another angle you can look at payments. There are right now on the platform of Kaspi, there are about 450,000 merchants. Kaspi said publicly that, I believe one call ago, 2 calls ago, that they think that that number over time, and not too distant future, the way I'm thinking about it, 2-3 years, but that's my timeline, so don't impose it on the company. They could get to 600, 700,000 merchants. That obviously extends the opportunity for Kaspi to generate more transaction volume where they charge their take rate. So now, there is another interesting element, how you can think about it. This is a new initiative. So the data on that initiative is very scarce because there is not that much to report so far. But Kaspi is also moving into B2B payments. Because historically, they've been either C2C, and they and send each other $100 if it was a very nice dinner. So, or it will be B2C. I pay at a coffee shop or at a grocery store or somewhere else with my Kaspi. Now they're moving to B2B. Now, there are some B2B transactions in the country which Kaspi will probably not serve. It's like, like Kazmunaygas is a big local oil and gas company that may never use Kaspi for its own B2B payments. However, I think Kaspi is very naturally designing its products for wholesale. So think about the typical flow of goods in almost in any country. There's a manufacturer. Then there is a distributor. Then there is a retailer. Sometimes if manufacturer is relatively small or retailer is very, very big, then there will be manufacturer direct relationship with the retailer. And Kaspi can logically capture both of those steps. In fact, they've already designed a solution that is targeting distributors and manufacturers to deal with a lot of local merchants who are buying their products. So think about it, Coca-Cola or Pepsi-Cola or someone like that, selling goods to distributors, and then those distributors are selling them to local merchants across entire Kazakhstan. So Kaspi can capture both of those steps. And if you think about it, you take retail volume, then you say manufacturers and distributors make of their certain markup. You take those markup out, your potential volume drops, but that's what they can in theory serve. And if you capture both steps, first you go from manufacturer to distributor, then from distributor to the retailer, then you capture it twice. So that's how I think about payments. Does it help?
Yeah, no, that's great. And, I think the other thing is you've probably, because you've got all the retailers linked up, like it does sound silly, but if you have multiple payment systems, it's tougher to manage your business. Like you do think there'd have to be some pull and demand. I mean, I don't think we've seen it crazy amounts yet in the US, but you do think there'd have to be some demand from the retailers like, hey, if I can use Kaspi to both take money from consumers and to pay my suppliers, like that removes the headache of managing two payment systems. And, it's free for me to take the payments from the consumers. Kaspi probably, as one of the largest companies in Kazakhstan, they can probably match your payment terms on the other places, make it pretty easy. Like it's just the benefits of scale, the benefits of that network effect, and the benefit of already having your foot in the door with the consumer. We've talked three. I know Kaspi has a few other.
Let me add another one. Let me add another benefit here, because I agree with you very much about what you said. There is another benefit. Kaspi is also experimenting with working capital financing products.
Yep.
You are a retailer. You are selling, Procter & Gamble goods, Tide detergent. You're selling Nivea cosmetics products and Coca-Cola, etc., etc. Kaspi, and you accept a lot of payments via B2C Kaspi. So Kaspi knows how much money you're making on revenue line. Now you are starting to work with Kaspi to pay for your goods that you're getting either from manufacturer or distributor. You may have working capital needs. Kaspi may extend you a loan because they see everything, and then they will just subtract it from your revenue coming in when you make those sales. Kaspi is learning right now about that product line. So in the next probably year, maybe 2 years, we'll learn a lot more, maybe even faster. But that's another way to increase your stickiness of a customer from B2B perspective.
And that's when, I don't know how PayPal is done on it yet, but I mean, I know PayPal, Amazon, those guys, I know they've moved in there, and I would have to imagine that they're going to have a lot of success where, hey, you're not a bank just underwriting Andrew and Artem's business of fun, right? You're Amazon, you see their daily revenue, their daily working capital movements. Like you can do a credit analysis of these guys better than anyone else in the world. And because you handle the payments and everything they do, you're going to be able to get your money out faster, know if the loan's at risk, and know if it needs restructuring, like way before anybody who's just like kind of checking the every quarter end covenants on that loan.
Correct, 100%. The power of data and what data enables you to do is massive. And it has been massive in the fintech business. And there is a potential for different data set to play a massive difference in the B2B business over time.
So we've talked payments and marketplace. You just mentioned fintech. I don't know if you want to talk the fintech business as well, or if you want to jump into some other areas here.
I'll talk about marketplace as well, because we haven't actually covered much of marketplace. So marketplace has about 5.7 million active customers. Remember, on payments, it's approaching 11, 10.7, 10.9, etc. So what means is that not every consumer that using Kaspi app and presumably local to the product, to the experience, is on marketplaces. So we're right now talking about roughly low 50s penetration for marketplaces. And over time, what it can be, well, probably it will never be 100% because there will be always someone who will not use Kaspi Marketplace. But can it approach 60, 70 over the next few years? I think so. But obviously it will be interesting to watch how it evolves over time. So that's the only thing that I wanted to mention on the marketplace that is worth attention and worth highlighting up front.
Perfect. Did you want to talk fintech as well?
So fintech, about 5 million lending customers. And you can think about the average size of a BNP loan, call it $60, $70, $80. Obviously, it fluctuates. It's roughly, you can feel free to run your own math. This is how I've estimated that. You need to keep in mind that on average, it's about 14, 15 loans per customer per year. So it means that you have, Artem, if I were in Kazakhstan, I was a customer, I may have several loans and my aggregate balance will be low or will be higher. Kaspi historically has had a very low default rates. And the reason for that is the amount of what Andrew actually touched upon and stole my my moment of my glorious moment to explain that is because Kaspi has a lot of data on the consumer when they underwrite. And this is one of the things that I explained. The worst scenario is when someone says, I want to buy a flat screen TV. I'm using flat screen TV as an example, which is something expensive. And they actually a fraudster. that consumer that bad actor has zero plans to actually ever pay that loan. They want to get that TV, then take that TV, resell it on the black market, get the money and run away. Yep. That's the worst. Because another alternative, when someone says, I'm buying this flat screen TV, I'm making my salary, in 6 months I'll pay down. And then 3 months later, they lose a job. It happens, don't get me wrong. But that's not as bad because number one, they already got some of your money back. Number two, that's a genuine good person. They will probably can work with them on restructuring or give them holiday, wait until they get back to when they will get another job, etc. That's solvable. The first bad person, bad actor, not solvable. And because Kaspi has a lot of data, they brought the bad actors never making even the first purchase down tremendously. How do they do that? Number one, they can look at my or Andrew's activity via payments. If I'm an active user, they know a lot more about me. How much money I spend.
The most likely fraud is the person who it's their first transaction and they're buying the TV, right? Exactly. If you and I have 2 years worth of data, we've done a bunch of stuff. Like you probably know, this is a real person. Maybe, as you said, maybe they could lose their job, things get worse, but they're probably not just buying this to go sell it on the black market and never pay back what they bought it for.
Yes, and it gets even better than that. What a normal person does before buying a flat screen TV for, let's say, $1,000 or $800 or $2,000, you go and you read a lot of product reviews. Where do you do that? You do it on Kaspi Marketplace. And if you do it because it's an important purchase, it's expensive for most people. So you probably spend quite some time browsing and figuring out whether LG is better than Samsung and this merchant has a discount, etc., etc. And if you've never done that, chances are you're probably not a good, you may be a bad actor. So that's why the NPLs, their first payment default rate is ridiculously low. Like as of most recent reported data, it's less than 1%. Like this is like terrific numbers. So that's what makes it very profitable. While they charge good rates, but it's not obnoxiously high rates, but because they keep their default rate so low, that's why they can navigate it well.
Perfect. Great. So I think that's a great overview of the different business lines here and everything. I wanted to dive in some risks, but is there anything else on, like, I know there's a lot here. Again, this is the super app. There's a lot we can talk about here, a lot of other opportunities. Anything else big you think we should talk about in these 3 segments or anything else?
So I would think about the super app strategy. You got consumers, you got an app, you got a product that delights your customers, and they love it. They want to be coming back. Once they keep coming back, you want to layer more services and more products. And because there is a habitual usage of an app, people will be using your app for the new products and services. And your customer acquisition cost should be very, very low because all those, in this case, millions of people are already on your app. And then the question is how quickly you can layer up more services. And I will give you a couple of examples where Kaspi is innovating recently. So example number 1 is Kaspi Travel. Kaspi Travel did not exist, call it 2.5 years ago. They literally started from zero. And then they said, we will be offering air tickets and train tickets, both domestically and if you want to fly to most popular destinations. And they started with that. And within, call it 18 months, they've become number 1 seller of air tickets and train tickets. So they built business virtually from zero to a pretty decent size within an incredibly short period of time. Recently, Kaspi management announced that they're offering travel packages. So think about this holiday package where you get flight and hotel, and then you go to Dubai or Thailand or whatever other wonderful country you want to visit, you buy that. So this is a new initiative, and they're using similar playbook as they did for Kaspi Travel. So that's one. Number 2, another example number 2 is Kaspi Grocery, where they partnered up with local retailer. So think about it as, Safeway or Whole Foods or something like this. And it's called Magnum. And the company is doing grocery delivery and they're partnering. Like offline piece is mostly taken care by Magnum, who is a retailer. And the online customer acquisition, etc., is done by Kaspi in the online world. So that's another example. It's still relatively early. They're only in a few cities right now, but over time, I think it will grow. So that's speed of innovation and how fast you can scale from zero to something very sizable. And there is another important trend here. If you think about it, if you and I or our counterparts in Kazakhstan decide to do a startup and say, let's do travel app where people can buy tickets. We know very little about the market, and we know very little about consumer behavior. Kaspi has tons of data about almost every single vertical of Kazakh economy, especially when it involves consumers. They may know less about B2B, but everything that involves B2C, they know tons. As a result, if Kaspi goes into a new vertical, a new product, a new niche, most likely they've done very extensive analysis and they have all the data in the world to make a very educated decision why and how they're going to succeed and how they're going to capture that market. So that's another thing that I would like to add.
Yeah, no, look, I mean, I think you could just sum it up as Kaspi is a super app, right? Like, and if you're a super app, the end game for a super app is probably you are, I don't want to say tax, but you can kind of think of it. You're a tax on the entire economy of every country that you dominate in, right? Like eventually most of the economy, if you're a super successful super app, you can dominate the majority of everything that happens in that economy. Like there's really no reason you can't or can't be involved with every kind of transaction. You know, like Visa and MasterCard get a cut of every transaction in the United States, basically, but they don't have anything else really going for them. Kaspi in the long run can be Visa and MasterCard plus Google, plus Expedia, plus Booking, plus like everything else you can imagine.
Yes, I agree with that. And that's exactly, I think, what they're playing. And the most important piece there is keep customers happy and delighted. That's number one. On that point, couple of things. Anecdotally, when I speak with consumers in Kazakhstan or out of Kazakhstan, I remember one conversation, like I asked a person like, oh, do you use Kaspi? The reaction was, I love Kaspi. We all love Kaspi. It's amazing. Like, what do you mean when I'm using it, right? That's one example. And that person was even living probably half a year in Kazakhstan, half a year outside of Kazakhstan. So that's kind of like just a story. And I had more conversations like this. That's number one. Number two, on YouTube, you can actually find videos. And that's, to me, that's an example that your marketplace is really doing well.
Yep.
Where it will be, how to become a merchant and start selling on something on Kaspi, right? So that's two. And number three, you can download Kaspi app while you're in the US or any other country, assuming or most likely, and you can browse the app, and it's very nicely, very clean designed app. Like feels nice, and it indeed has everything there. Like, renew driving license, tap here. Get your company registered, tap here. Oh, you want to buy groceries? You go here. You want to buy something else? You go there. So like all that stuff, like very nicely designed in one place. So number one, speed of innovation. Number two, and this is the growth drivers. And I think based on some of my conversations, I have a feeling that some people do not appreciate the magnitude of growth drivers for Kaspi. Because this is what I've heard. Artem, Kazakhstan has 18 million people. So it's relatively modest from the population size perspective.
Yep.
This is not Indonesia, for example, or Mexico or United States. And Kaspi already has, call it 10 million, 11 million, whatever the number is. How big you can get? You already almost exhausted the market. And that's partially true if you look only at potential active customers number. Where it's not true is number one, customer engagement. As we spoke about, there are still 5.7 out of 10.9 roughly is marketplace customers on payments. So there are still a lot of people who are using Kaspi for only one use case, but not for the others. So there is still tremendous opportunity there. That's number one. Number two, increasing number of merchants, which will lead, and remember I mentioned on marketplace merchants would be, I already mentioned those numbers, So from kind of 450 to 600, 700, I believe, if correct the public records I'm quoting from memory right now, that's another growth driver. Number three, you can go B2B, which we discussed, and it's not like in theory, they already announced that initiative. That's a massive expansion of your TAM. Innovations, new products such as grocery, travel, packages, that's a new thing. There is a possibility, even though I'm not modeling that or I'm not betting on that, there is a potential to expand in other economies in Central Asia. It may or may not happen, I don't know. If it does, then we just, increase our TAM, depending on the country. Kyrgyzstan is small, Uzbekistan is bigger, but if that happens, it can be a very sizable increase in TAM. So I think there are a lot of growth drivers. And once you build this virtuous cycle, it's on the company to mess it up for this cycle to stop churning. And as long as they do a good job, which they've been doing, you have potential to keep churning that flywheel.
Perfect. So I want to come back to that international point in a second, especially when we discuss risks. But I do think we need to talk real quickly about management here. And I think for anyone's listening, again, this is probably going to end up being more on the bull case, but there is a fantastic HBS article from 2019 when they were they had just gone public, but the HBS is like addressing their thoughts around going public. It's got a lot of background on management. So we can talk management, we can talk insider ownership. I think recently capital allocation really points to management. Like all of these are going to be bull cases. We'll discuss risk in a second, but I do think we just need to address it and talk about it real quick because it's a super app. It's capital light. You're relying on them to continue taking that tax on the economy we talked about. So it's pretty important to keep innovating.
Okay, happy to talk about management and capital allocation and insider ownership. One thing when I say capital light, I just want to clarify. Marketplace is capital light. Payments, capital light. Fintech, you're using your own balance sheet to extend those flows, right? So now, if you ask me about the mix, very recently, earnings from marketplace and payments combined became bigger, more than 50%, and became larger than earnings from the company's fintech business. So capital light earnings are growing faster than, call it capital heavy, for the lack of the better word, earnings. And by the way, company also provides very good segment disclosure, which is not always the case for many countries which have several business segments where you can actually go and do a lot of analysis on your own.
I'm looking at their 3Q presentation, and at the back, it's really nice. They just break out cleanly. Hey, here's the payments income statement. Here's the marketplace income statement. Here's the fintech income statement. Here's the it's really nice.
And to make things even better, if a particular initiative gets enough traction that management starts believing that it's important for investors to understand what we're doing, they will break it down for you over time. For example, when Kaspi Travel started, it was tiny, so they just mentioned, we're doing Kaspi Travel, it's an initiative, we're experimenting, we're learning, we have a big vision. And then once it became sizable, they're like, wait a sec, we'll put it separately as revenue and we'll show you so that you will know what we're doing there. So disclosures, honestly, most US companies will not have as detailed disclosures as Kaspi does. Okay, now let's go back to shareholder base, since you asked that, and that's very, very important. So biggest shareholders as of September 30th are private equity firm that owned this company for a very, very, very long time called Baring Vostok. They own about 28.5% of the shares outstanding. Chairman of the board, Vyacheslav Kim, owns 24.26%. CEO Mikhail Lamtadze owns about 23.42%. So if you look at them combined, we're talking about one other thing. Other members of the management team own about 3%.
Yep.
So which means that your free float is roughly 20.5%, 20.5%, which is not that big. And it's listed in London. You can look up ADV. Now, management said on 2 calls ago, management said that they are thinking about NASDAQ uplisting. To me, the way I interpret this is the following. It's difficult for me to imagine a scenario where Kaspi actually needs money for itself. And we'll talk about capital allocation in a second, why I don't think they need money for themselves on the balance sheet, which means that probably some of the insiders will offer, if the company were indeed to do NASDAQ listing, as they said publicly, in that case, it probably will be coming through a secondary sale. One of the shareholders, or maybe a combination of them, will offer some of the shares to the public. Buying Vostok probably is the most logical party to do so, because they've been in this investment probably for 15 years by now. That's a long time for private equity firms. And it clearly has been a very successful investment for them.
Yep.
And at some point, it's logical for private equity firm to exit. That makes just tons of sense. That's how PE firms are structured. So I think they're probably the most logical seller. Whether other insiders such as chairman of the board, Vyacheslav Kim, or Mikhail Lamtadze, CEO, whether they will participate or not, I don't know. Maybe they don't know, who knows? But that's potentially can be another catalyst. Because my observation is this: someone like C Limited or Mercado Libre or PagSeguro or StoneCo, they are very much on top of mind for many US investors. While my observation, Kaspi is not as much. And I would argue that even more attractive as those companies. Kazakhstan is a smaller country than, let's say, Indonesia or India, but profitability is.
Hey, Artem, I think we were losing you for 1 second there. I believe what you were saying, I think it was the internet on your side. We'll try and edit this out, or maybe I'll just get lazy and leave it in. But I believe what you were saying was, look, you compare this to Stone, a couple of these other guys. They've got similar business models. They're probably more dominant in Kazakhstan, but because they're London listed, because they're smaller, they don't really get the same attention from a lot of people who might be interested in them. They relist to the US. The shares get a little more liquid if if one of the PE firms or some insiders offer some shares. And all of a sudden, they might have a whole new investor base who's doing the work you've done and saying, hey, 12 times PE, dominant position, super app, growing 30% year over year. Like, it's a pretty nice combo.
Correct. It's pretty much what I said when probably my connection slowed a little bit. In my opinion, any American-based investor who likes Mercado Libre or likes C Limited or PagSeguro or any of those platform type companies around the world outside of the US, especially if it's an emerging market, and they either looked at them or maybe they looked at them and actually bought them and they own them, I think any of those investors would be interested in researching and analyzing Kaspi. Whether they will decide that it's a great buy and they should buy it, or whether they will decide it's not a great buy and they will do nothing, I don't know. It's up to them. Everybody does their own analysis. But at least I think they would look. And my experience so far is that most people never looked at Kaspi, and many people never even heard of it.
I want to talk upside and a couple things in a second, but I want to start talking about the risks because we're starting to run a little long, and I want to make sure we address at least some of the risks in this investment. And the risk I want to start with is, again, it kind of turns into a bull case at this point, but the first thing I thought when I looked at this company, and not to hit everyone over the head too hard with numbers, is I looked and said, oh, this has a fintech component. They do a lot of B2B lending. I thought B2C lending. I thought lending to consumers in emerging markets, small dollar loans, like that is balance sheet intensive, that does have blow up risk. And, I looked at the consolidated balance sheet and I said, okay, they've got $4.5 billion. I can't remember it's KZT is the denomination, $4.5 billion of assets supported by 3.3 billion of customer accounts, 2.8 billion of loans out to customers. There is run on the bank risk was my initial thought. So I want to ask you, can you talk a little bit about the risk of funding to customers? Actually, we probably addressed it with data, but I think the run on the bank risk and how they've responded to historical run on the bank risk, I think that's really interesting, both for thinking about the downside and for thinking about the kind of NPS score and everything that the customer has.
Yes. Okay. So that's a good question. So if you, and to be clear, I am not on a commission by Harvard Business School. So they are not paying me to advertise their cases. But if you go on HBS and buy Kaspi HBS case, and you read about it, and you read it, by the way, it's a great read to learn about the company and its evolution and management and characters involved, and as well as Kazakh economy, you will also learn that run of the bank or risk of run of the bank actually happened in the past, where rumors would appear that some Kaspi has problems and CEO ran away from the country. It was a story like this. And then they would record a video where CEO Mikhail Lamtadze will be posing, I think, with a very fresh,
it was
newspaper.
It was literally it was like a hostage photo where it was him with that day's newspaper, and they posted it and they put it in newspapers and said, "Hey, look, he hasn't," because the rumor was he took all the money and run off. Yeah. They were like, "Hey, look, he hasn't." Like, here's proof. It's a proof of life photo, right? He's here. He's right here.
He's here. He's here. You see, he's here. So it happened, right? And it happened several years ago. And I think at this point in time, the customer affinity is a lot stronger than it used to be, because there is more data points of your interactions. So I think the reputation is a lot stronger, and the risk of a run on the bank is a lot smaller. Is it zero? Probably not, but it's a lot lower than it used to be. So that's number one. Number two, Kaspi is a very important part of the Kazakh economy. So I believe, if necessary, NBK and Kazakh government can always help Kaspi out. Not help in the sense, oh, you wrote a bunch of bad loans, we will help you out. No, but in the sense that they will make necessary steps to
open the Fed window if they had a liquidity crisis, basically. Yeah,
exactly. So that's the second point that I think. Third, and this is less about run of the bank, it's more about the earnings. What if there are plenty of bad loans, even though we have data that shows that it's not the case? The way you think about it, you can say, okay, if a bunch of earnings from the fintech business is low quality, okay, wipe out half of them, or pick the number that you want to reduce it by, and then you will be left with more than half of their run rate earnings from two capital-light businesses, and whatever earnings you want to assign to give Kaspi credit for in their fintech business, right? You can do that. So if it was purely buy now, pay later product, I think it will be a lot less interesting. So in this case, I think the diversity of revenue and income streams is a natural hedge against low or poor quality of loans. And again, I want to highlight that we haven't seen it so far whatsoever.
We're 50 minutes in here. We've talked about this is basically all the revenue, all their earnings, all their income is from Kazakhstan, right? So I think we do have to talk just Kazakhstan as an overall country risk. Yep. I'm just looking at, I just pulled up Kazakhstan GDP, and I'm just looking at, what Google gives me. And Kazakhstan's GDP goes from 115 US billion in 2009 to, it peaks at like 240 billion in 2013, drops to 137 billion in 2016. Today it's up to 200 billion. So that is, doubling your economy and then cutting into a third in a 5-year period. This is wild GDP type stuff. But, I just want to ask, how do you think about the Kazakhstan country, GDP risk, outlook, all of that?
Okay, so a few things. So number one, Kaspi makes money in Kazakh local currency called tenge. Andrew and I are US dollar denominated investors. And as a US dollar denominated investor, anybody does not want this outcome. You buy something that is worth 100 tenge, which is 500 tenge, which is $1, and then tenge, you make a lot of money. It goes up, it doubles. It's 1,000 tenge right now. You're very excited. But because foreign currency also depreciated by 50%, now all of a sudden you're like, oops, you actually didn't make any money in USD. So you have that risk, and you need to think about what your either broad view on Kazakh tenge currency, and you can look at historical FX rates. I will share how I think about that. And remember, I'm not a macro guy. I do not have a very strong view on Kazakh macro. But the way I think about this is the following. If the company is growing earnings, I will use numbers a little bit round just to illustrate the point, 30%. And you do it for 2 or 3 years. And then in year 4, foreign currency experiences 30% depreciation against US dollar. But in local currency, it's still growing 30%. You will just stay invested for 1 extra year in order for you to get to the same point where you were. So that's point number 1. Point number 2. So that's on like on Kazakhstan for local currency. Number 2, oil and gas play an important role in Kazakh economy. It's similar to Saudi Arabia probably, or similar to United Arab Emirates.
Yep.
Again, the share may be smaller, but it's still a very important source of revenue coming into the country, and it's a big export. So, but if you're long anything, in my opinion, and this is my opinion, if you own something in Kazakhstan, you are to a certain extent long oil. How much you can try to run all sort of regressions and correlations and form your own view, but there is this element that you need to keep in mind. So if you are a very oil-heavy investor and all of a sudden you decide to invest in Kazakh marketplace, remember, some of your exposure you already have in your portfolio, in a way, very indirectly, right? If you are an energy investor, you may feel, okay, I'm okay with that, having that risk. And remember, this is not your core bet, because I would suspect that if oil goes down, Kaspi will have a lot of idiosyncratic factors working in its favor, and it should still power through and do well. But if oil goes up, let's say to 100 again, it's probably good for Kazakhstan economy and probably good for Kaspi, because people will have more money to spend and send each other and buy goods and buy services and travel internationally. So keep this in mind. That's the second point. Third point, Kazakhstan is a country which will be classified as an emerging market or frontier market. And all risks of investing overseas in emerging markets or frontier markets are present in this case. So you need to think about those for yourself when you are doing your research.
As we said, it's the unofficial, other people than us have described it as the unofficial national bank, national app of Kazakhstan. That's great if Kazakhstan's growing. That's great if there's probably political stability, but emerging market and frontier risk, like if that frontier risk plays out and you're the unofficial national app of the Kazakhstan, like you're probably going to hit pretty hard with that frontier risk. Not a guarantee. Nothing on this podcast is a guarantee. Not a guarantee, but you can imagine frontier risk in terms of that. You can imagine frontier risk is, even if that went fine, you can imagine frontier risk in terms of the currency just evolving, the economy, just all sorts of risks there. So yeah, one more thing. So international expansion, right? I listened to the Q3 call. They say, hey, we've got a great team. Obviously, we've talked about people can. I'll include a link to the HBS notes in the show notes. They've got a great management team. They say they've got a great team overall. They're saying international expansion, we're going to do it when the time's right. But, if I went back 4 years ago, I could see them talking about international expansion. It's taken some time and they haven't really had any traction there. Is this just, hey, it always takes a little time for bread to bake? Or is it, hey, they dominate they dominate in Kazakhstan, but it's really hard to get this stuff going. They're just not going to be able, it's too late. They're not going to be able to chicken or egg in any other market.
Only time will tell. If another country, and pick any country in the region, already had a player that is similar in scale and service and customer value proposition and NPS score and customer happiness to Kaspi, I would say yes, that country is too late to go and try to get into. Alternatively, if another country does not have such a predominant player, which has a superb strategy and combines so many wonderful things, then Kaspi probably can go there and succeed. But only time will tell whether they will go into other markets or not. I am not including any international expansion into my thesis. If it happens, I will need to substantially update my model and my calculations.
Yep. I have two last questions I want to go through. Just the first, capital allocation, and especially the dividend policy, because I emailed you over the weekend, so but I think when an investor first looks at this, they're going to see a dividend that's going up and down over time, and they're going to say, hey, what's going on with capital allocation? They do some share buybacks here. Obviously, I'll let you discuss it, but share buybacks are somewhat limited by liquidity. But you see the buybacks, you see dividends going up and down, and we're not used to companies doing dividends up and down, even if I think that's actually the right way to do dividends. Neither here nor there, but just want to turn it over to you on the capital allocation and explain what's going on there.
Sure. So on capital allocation front, the company has said that our goal is to return to shareholders roughly 50% of our net income. It can be done via dividends, which they've done, or it can be done via share buybacks, which they've also done. Share buybacks have been fairly limited. And remember, this is a company that has been public for a couple of years. So we are not talking about a company that has been public for 20 years, right? So it's relatively new phenomenon. So far, they've done one share buyback that they finished and completed, and they've announced a second one they're presumably going through right now. If I'm not mistaken, and this is from memory, I can be off a little bit, I think their first buyback was for 100 million, and I think second one was also for the same number. But
I think it was like 40 and 60 combined to 100, and the most recent was 100, but I defer to you. It doesn't really matter either way, but yeah.
It doesn't change. Remember, this is roughly like 12, 13 billion market cap company. So point is that it's a small portion of buyback. Right?
It is, but 12 billion market cap, so 25% float. So we're talking 2.5, 3 billion float, right? So you take out 200 million, like it's actually a pretty meaningful and pretty quick amount of the float, but you're not going to charter style buyback 12%
exactly.
of your shares.
This is not John Malone buyback style, right? To be clear. And part of that is a limitation, as Andrew alluded to, because of the float is fairly limited. Again, remember, the float of the company is about 20.5%. I would suspect that a good chunk of that is owned by investors with a very long-term horizon who may not be selling their shares. Because when you think about it, and there are plenty of this type of loan-only funds that will be, we're doing emerging markets, or we are doing XYZ, and they have billions and billions in assets under management. And in my opinion, for them, Kaspi is a fantastic investment to have. And it's a pretty stable money. They're not going to be trading a quarterly results. But this is not a pod hedge fund that does it, which means that those shares are not really tradable. They're not easily tradable. They're not easily accessible. So Kaspi doing buyback, even at a relatively small scale, I think it's already, in my opinion, is a big testament to management thinking in the right frameworks about capital allocation.
I agree. Look, if your shares are undervalued, and you've got excess capital, why not buy back shares? The fact that they say, we're going to return 50% of net income to shareholders, and then they said, hey, shares are undervalued. Yes, we've got a float problem, but why not switch some of it from the dividend to buybacks? Shows an insider mentality, shows a smart. Let's talk about that, though. Valuation. Last thing I want to end on.
Dividends. Dividends.
Go ahead.
So some money will be going to... So depending on which foreign currency you're going to use, whether you're going to be using average for the year or average for each quarter, depending on your preferences, then there is the way how IFRS and GAAP prescribe you to do it. And obviously then there is common sense, and those two may or may not contradict each other or not. So think about this way. The company is probably about to generate 1.1, 1.2 billion in net income in 2022. Depending on which FX rate you're going to use and depending on whether you think they will hit guidance or do slightly better or slightly worse. So if you think about it, okay, half of that can be more, by the way, right? Can be more, because on the one of the last earnings calls, someone asked about dividends and the team said, like, look, this is what we said publicly, but if you look at our run rate, we're actually going a little bit above 50%. But we said at least 50%. So let's stick to 50%. Then we're talking, call it 550, 600 million of returnable capital. Can be buyback, can be dividends. If, let's say, they do 100 million buyback, and again, check those disclosures because both Andrew and I right now are blinking on the exact magnitude of that buyback. let's call it 100 to keep things simple, then we're talking about 450 or 500 million of potential dividends. And this is roughly on 12.5, 13 billion market cap company, depending on the day. So that's your potential dividend yield. And if management sticks to the same policy, and if earnings will be rising, then that the distributable income will rise as well.
Perfect. So let's just go. That was great. Let's just talk real quickly. They're buying back shares. Obviously, they're buying back shares because they see value in shares. You have a position, as we disclosed at the start. Obviously, you have a position because you see value in shares. How should people think about rough valuation for this company, right? You've got a company trading at 12 times price to earnings, growing 30% per year. If I ignored emerging market, you put those together and people would be going crazy for it. But then you add emerging market, a lot of the balance sheet is in customer loans. And I think people might be saying, I have no freaking clue how to think about multiple valuation, all of this for this company. So how are you thinking about that?
Look, first of all, this is obviously very personal to every investor, right? How they approach this. So the way I would share a framework. I don't want to share exact numbers, but I want to share frameworks, how I think about it. And then you listeners can say, that's an interesting framework, let me apply it, or say this is a very bad framework, and they will not apply. So think about how revenue and how earnings will be growing in the next several years. And we went through growth drivers already. So you know what those growth drivers can be. Then you think about their margins. Despite they're already extraordinarily high, they have been slowly expanding them even more. So think about your margin outlook for the next several years. Tax it at a rate that's all public information, and then it will get you net earnings, net income. Think about how it will be, how fast or how slow it will be growing in your example. And then you need to think about that period and the growth durability. Like how much time will lapse when Kaspi will become GDP grower or GDP plus 2% grower. So I have a lot more, and it's easier for me to talk about what multiple should be once you reach certain level of maturity. And remember, you are investing in Kazakhstan. So, and you can look up where local bonds of Kazakh government trade.
I just pulled up the local bonds. I was going to make a comment on that. I'm a little jealous you beat me to it, to be honest with you.
Okay, so like next time, when I have another haircut, I'll come again talk about another company. So if you look, this is an approach that is similar. What corporate finance will prescribe you, you take sovereign borrowing rate, and ideally you try to make it around 10 years. And Kazakhstan government is, based on my data, the bonds that are local currency, remember, this is not USD currency, this is local currency bonds that are expiring in 2033, which is conveniently about 11 years out from now, with a caveat, there is a call in 2028 that may or may not be exercised, we don't know. The yield is about 10.7%. So that's what your sovereign borrowing rate is. And then you think about the cap structure of Kaspi, and this is where it gets actually very, very interesting, right? Because you can say, okay, so they got sovereign rate, then if they were borrowing money, you add a couple of percentage points or whatever you need to add, because most likely sovereign nation in its local currency is a lot more credit worthy than any company, regardless of how great it is. By the way, there are exceptions in the history, but let's not go there. And then you say, okay, but there is also equity risk premium, so you need to incorporate that. And then you will end up with some sort of weighted average cost of capital, according to corporate finance textbooks. This is where it gets interesting. Kaspi has also flowed because there are various customer deposits, and some of them are interest-bearing, which are attractive source of funding. And there is also float coming from payments, which is effectively zero interest funding source. And then it's up to you to decide. That's why people say valuation is more art than a science. Then it's up to you to decide how you want to dice it and slice it and what you think is the right discount rate for Kaspi earnings stream should be, even at maturity, right? But I think the trickier part is actually to get to that level and how long that growth runway will last. If it's 3 years, it's less attractive because you need to apply that normalized multiple to mature earnings in, let's say, 2026. If you think that the growth runway is 5 years or 10 years, that's a very different story. So that's my frameworks.
No, look, that's well said. The only thing I would, and look, I'm doing this on the fly, so I could be wrong. The only thing I would add there is I actually think you undersold the Kazakhstan yield. So I'm looking, as you said, those 2033 bonds have a near-term call. I'm looking at Bloomberg. Those are 3.5% yield to call. The only bonds I can find that aren't callable actually go out to 2045. And those are trading at a 6% yield to worst. And that's out to 2045. US government 20-year bonds trade for about 3.75%. I mean, if you had told me before this pod that Kazakhstan 20-year government bonds traded 2 to 2.5% inside of US bonds, I would have said, no way. Like my mental model would have just been Kazakhstan's bonds are 10% or something, but it seems like it's even better. And obviously a lower risk premium on the government bonds when you've got something that, you know, is 100% Kazakhstan should call for a higher equity multiple. I could be out of turn there. Like obviously I'm just kind of glancing at Bloomberg, but that's what I'm looking at. Everything else you said, I think makes tons of sense. So it would actually be a little bit better.
Andrew, which bond? 2045?
2045. Yeah.
What yield?
6%.
Okay, you're looking at international bonds. You're looking at USD denominated bonds. You need to, in my opinion, and the way corporate finance typically teaches that, you need to be looking at the local currency government bonds,
Yeah.
not sovereign.
But then, as you said,
you want to match the underlying currency of the sovereign bond and currency of your interest payments with the currency that Kaspi makes money in. Well,
look, this is why I'm not a lawyer. They say a lawyer should never ask a question that they don't know the answer to. I'm a podcaster and I'm just out here throwing Bloomberg numbers just off the cuff of the thing. But again, and as you mentioned, like, look, they do have that interesting trade that so many people have talked about in US small banks recently, where they have customer deposits from, if you've got, think about your Venmo account, you probably have a couple $100 sitting around there. Venmo's not paying you interest on that. If the Fed is paying Venmo or a bank 3%, 4%, that's all net interest margin. Same with Kaspi, right? If they've got a lot of your B2B and stuff, they're probably not paying. They've got this great source of deposits that they don't have to pay interest on. They can go to the Fed under rising interest rates, rising inflation, should be a beneficiary of that type of stuff there. Anyway, we have covered a lot.
One last thing that is important when we talk about risks. Based on my observations over the years, the most common way for an emerging market company to get into trouble is to have mismatch between its earnings stream and its liability stream.
Yep.
In other words, you're a local company in Argentina, in Brazil, Mexico, Kazakhstan.
US dollar denominated bonds.
And you make money in local currency because you deal with local consumers. You're not an exporter of oil or metals or copper. You're a local company. You're a grocery store chain. And you make money in local currency, Mexican peso, for example. And then you decide that borrowing Mexican peso will cost you 12%. But if you borrow in USD, it's only 6%. And say, that's a great idea. You borrow at 6%, then something happens in your local economy and your local currency goes down substantially versus US dollar. So your local earnings may be same or even higher. But in USD, instead of making $100, you're now making 60. Yep. And all of a sudden, your, for example, debt to EBITDA used to be 2 times, which is manageable. And now all of a sudden, it's 5 times or 6 times.
And it's even because the debt that you took that was 100 Mexican pesos, if the pesos go down 40, now it's worth 140 Mexican pesos. Yeah. So earnings down and the liabilities up. It's just an awful mismatch. Yep.
Exactly. So it's a horrible mismatch. So that's the most common way, based on my observations, how we can get into trouble as a company from an emerging market. Kaspi does not borrow in USD almost never. So as a result, if foreign currency tenge depreciates substantially, you may take a hit as a US dollar denominated investor. We already covered that. But in my opinion, there is no existential risk here. We're like, oh my God, the worst happened. So that's not the case. They're very thoughtful about it. And they clearly think very clearly, pun intended. So they have thought about it very carefully, how to design their capital structure to avoid that type of situation.
Perfect. We've covered a lot, but I just want to give you the chance. Anything else that we didn't get to cover here that you think we should have touched on, whether it's on the risk side, the upside side, anything else investors should be thinking about?
One thing that I would say at the end is this. Regardless whether you have interest in researching a company in Kazakhstan as a potential investment or potential idea or not, regardless of that, I think Kaspi's story is so uniquely fascinating, and what a very ambitious, talented, driven management team can do. That's honestly, I think even if you say like, I will never invest in anything outside of the US, and that's a legitimate approach because it's your investing portfolio, I would say still read about Kazakhstan because it's such an interesting, read about Kaspi because it's such an interesting story. And not only on strategy and super app and what we can learn from that and apply to other markets and other countries, but also how management team drove innovation and how they drove culture. And on culture, I want to mention two things. My sense is that Kaspi culture is not a bank culture, based on my research. It's more of a tech company culture.
There are quotes from the CEO, like, I can't remember where it was, but somebody says, oh, bank, Kaspi, the bank. And he'd be like, we are not a bank. We are a technology-driven innovator. And obviously that's a classic thing for JP Morgan, all those people to say, we're not a bank anymore. But Kaspi, it's kind of hard to argue it when they're, launching travel verticals and all this type of stuff.
Exactly. So that's number one. So culture is unique. Number two, based on my research, company is attracting tons of young, talented, smart, well-educated people in Kazakhstan. So this is like not your, like traditional banker type people. This is like young, full of energy people who are coming to do cool things in a cool company in their country. And I think, again, similar, when I say I think, it's based on my research, right? And it doesn't mean that I'm right in my conclusion. That's why I say I think. The company is one of the most desirable employers for young people in Kazakhstan because it has a cool vibe. It has a great culture, right? So that's something to keep in mind. So just encourage everybody to read the HBS case. There are some other materials on the internet that you can find and enjoy reading. It's just a fascinating story, in my opinion. Also, there are several videos of CEO Mikhail Lamtadze on YouTube. They done in Russian, but you probably can get YouTube to translate them for you. I don't know how good translation will be, but you can listen. It's interesting perspective or coming from a CEO and just see his behavior, what he does, etc. And similar, download an app, like play with it. You don't need to buy anything. To be clear, I have not tried to renew my California driving license using Kaspi app. I'm not sure that it will work, but you can definitely get an app and just play with it and see the touch and feel and see whether you like it or not.
Perfect. Cool. Well, Artem, this has been great. Why don't we wrap it up there? Thanks for coming on for the second time. I'll include a link to the HBS case study in the notes and then a link to Artem's very, very thinly used Twitter account in the notes as well. But Artem, thanks so much for coming on. I think I've made
one tweet or maybe two tweets in my entire life.
Thinly used Twitter account. But thanks so much for coming on for the second time. Looking forward to the third time, and we will chat soon.
Sounds good. Thank you, Andrew.
A quick disclaimer, nothing on this podcast should be considered investment advice. Guests or the hosts may have positions in any of the stocks mentioned during this podcast. Please do your own work and consult a financial advisor. Thanks.